sector will do well. Auto has really done well in this year, up by around 20%. However, it has been consolidating from last 3-4 days, but major trend is positive. And we believe that here you have safety as well as the potential for the upside momentum. So we'll focus on selective auto name, especially when I talk about the TVS Motor or a counter like M&M. These stocks are well positioned to see the further uptick in the market with the market momentum. So auto is the one segment where we'll have positive view. We have positive on the defense name, whether you talk about HAL, BL, Cochin Shipyard, Mazagon. So if you are looking for a stock specific, then definitely your position should be built here. But still, selective IT counter could do well. However, even after recovery, we are down by around 22% in Nifty IT in this year. But I believe that counter like HCL Tech or Infosys and TCS can provide some safety. So I think one should select such name to be in this market like defense, banking, financials, selective auto, and these stocks have potential to generate alpha in this market.
Is there a space? Is there a sector? Are there some particular stocks where one should absolutely abstain from, stay away from? If there is anything on the top of your mind, could you share that?
We'll avoid mid-cap, small-cap name.
Okay.
We'll avoid pharma name because we believe that even if market recovery, it is going to be very tough for these stocks to perform well. So apart from selective financials, banking, defense, auto, FMCG, I'll avoid all other names which are volatile. Even if you talk about the media names, I'm not going to pick them because they are highly volatile, not performing when market is performing. So it is very tough for these stocks to perform well, even if market consolidate or correct.
There have been 2 new listings in the stock market today. Bikaji Foods, which raised 881 crore rupees, opened at a premium of 8% on the NSE. The stock ended up 6% at close of trading. The other listing was of Global Health, the parent company of Medanta Hospitals. The company listed at a premium of 19% over its issue price and ended the day with 24% gains. My colleague Sakshi Batra caught up with Dr. Naresh Trehan, Chairman and MD of Global Health, after its successful listing. Sakshi began with asking him his first thoughts on the strong listing. Here's an excerpt.
True that there is a good feeling around the fact that our listing has been successful. It proves 2 things. The growth story of Medanta as a part of Global Health has been on the back of providing the highest end of multi-specialty care on the same platform by the best of kind of doctors to the patients at as affordable a cost as possible. We now have 5 functional hospitals and the 6th one is coming out of the ground in Noida. So it's been a very steady but very strong growth. On the back of that, the whole IPO, because it's one of those points in a company's life that you need to become more outward looking, where you can actually grow faster. So the investors actually have also reposed their faith in us, their confidence in us, that yes, this is a good quality company being run with all the highest ethics and credibility, and also serving the people.
So could you also share more on the expansion plans from the current about 2,400 beds that you have? You talked about the new facility in Noida coming up. By when can we expect that to be operational and then start to contribute to the books?
So as we speak, today we have about 2,500 functional beds. But our hospitals like Lucknow, Patna, they still have capacity to grow. So like Lucknow is 1,000 beds, 500 are functional, and more beds are being made functional right now. So there is growth there already, which is going to be in the next 12 months or so. And similarly in Patna, where we have a 650-bed hospital, 330 beds are functional today, and they will also double in this period that we're talking about. And then Noida. So we have a good 1,000 beds on the anvil. So we expect that with the completion of Noida by early 2025 financial year, that we should have then 3,500 plus beds.
Since I was asking you about expansion, in the future, do you have any plans to also go international?
So we are looking at everything. There's no exclusion, but there are principles. The principle remains the same as I told you, that we should be providing the highest end of care, so that our quality never gets diluted. There are many models that are available, as you know, M&A, O&M, greenfield, brownfield, all these things are on the table for us. We are agnostic to what kind of facility, but we are only principled to say it has to be able to provide the highest end of care in the environment that we go. And we serve the largest population possible at the best price so that over a period of larger volumes, we make enough revenue to justify the faith or the confidence that the investors have reposed in us.
So what is the current revenue mix like? Where are the revenue contributions coming in from going forward? Which are going to be the key growth drivers for you?
So as you can divide it up into two, the mature facilities and the recent facilities. So more than 6 years, we consider the mature facilities, and that is Gurugram, Ranchi, and Indore. So those are the ones that will continue to show growth as we move forward. Look, what is the return on capital in the mature facilities? That's close to 27%. So there is a very healthy growth there. If you look at the newer facilities, Lucknow broke even within the first 12 months. Gurugram broke even in 15 months, but Lucknow did even better. And Patna, which is now operational, actually just about eight months or so, is already well on its way to breaking even.
Also wanted to understand on the margins front. I think you locked in an EBITDA margin of about 22% in FY22. What is the margin outlook from here on for FY23 and beyond?
So in our way of thinking and the way medicine should be practiced, it should be somewhere between 22 and 25, because of the fact that you can overcharge, you can do many things, but I don't think that's a good thing to do. So if you want to stick to the core value of medicine and taking care of patients, your EBITDA levels of around 25% should be max. 1 or 2 up and down is okay. But to try to go much beyond that, something will crack, something will give. Either your principles, or you're overcharging, or you're under-providing the quality. So I think that there is a morality to it. Like I always say, good medicine makes good business does not make good medicine.
With a bumper festive season behind us and stock markets touching new highs, the question being asked by many is, will the economic momentum continue, or will growth fall prey to global headwinds and inflationary pressures already undermining the Western economies? Business Today TV's Prerna Lidhoo caught up with Neelkanth Mishra, the India equity strategist at Credit Suisse. Listen in.
In the first phase of the recovery, as the lockdowns are lifted, you will see those excess savings starting to get spent. So that's the best way for the lower income to start emerging. And we see very good signs of that. So as tourism comes back, as various services, education, so all of those services come back, I think the jobs are also going to come back for the lower income households. And I think over the next 6 to 12 months, you will see a very steady recovery. Look at two-wheelers, right? Despite having sufficient supply, this was a very weak market. The last 2-3 months, there's been a steady improvement. It is still not very strong, but there is a steady improvement in that demand.
Good that you spoke of two-wheelers and the auto industry. It has been under a lot of pressure in terms of supply side demands and fuel prices going up. There's a lot of external factors at play. What can a country which is dependent on imports do in such a case to navigate and sort of de-stress itself?
See, the reality is that we import half of our dense forms of energy. And therefore, the cost of energy will be high. And so if there is global volatility, energy costs will go up. What needs to happen from a consumption perspective, from the perspective of protecting the industry from volatility, is that you keep the fuel prices less volatile, right? So I think very prudently, when oil prices were plunging during the pandemic, the government raised excise duty. And as the crude oil prices went up, they started cutting that excise duty. So I think the objective should be to keep retail prices steady, though not overly protective, because the last thing it's also about affordability, right? So we have a significant balance of payments deficit right now, which we need to bridge. So some amount of that pressure needs to be passed on, but if you pass on too much, it becomes it breaks a few things. So I think keeping fuel prices steady is extremely important. We also need to accelerate the transition towards about forms of energy which we have enough of. For example, we do have coal, we have renewables like solar, and there's quite a bit of solar available in India. But for that, we need to electrify our transportation. So I think prioritizing capex in railways, I think the government has done a phenomenal job with national highways, expressways, even state governments have done an exceptional job. But I think we need to get the railways capex, and this year it's going very well, and I hope we can continue building on that momentum. At the same time, the electrification of two-wheelers, the electrification of cars, personal vehicles, electrification of heavy commercial vehicles, I think all of those over the next 10 years we need to prioritize so that we can start shifting to more domestic forms of energy.
What about jobs and in terms of consumer confidence going forward? How do you see that shaping up?
So, one of the most reliable indicators of the job market is the demand for Narega, right? So, because it is only the very desperate who will want to work for 200 rupees a day in the hot, searing sun. This demand had shot up during the pandemic, during the lockdowns, because people went back to their villages, they had a shortage of jobs, and they were desperate and they sought this work. This demand is now almost back to pre-COVID levels, which means that the number of desperate people who are seeking Narega work has come down, which means there is some normalization in the job market. Where I think that significant improvement can happen going forward, especially at the lower income levels, is in the construction market. So the real estate market, which was supposed to have recovered in 2018, and then if you remember, there was an NBFC problem which led to the bankruptcy of some housing finance companies and then some real estate companies. Then 2020, this was supposed to have normalized and COVID hit. So now we are seeing a recovery which is long delayed, right? It's been delayed by at least 4 or 5 years. And it has been running, the down cycle has been running for nearly a decade. So if the real estate cycle, construction cycle picks up, I think it will create a large number of low-income jobs, which is required for healing of balance sheets which have been broken by the pandemic.
Let's take a very quick break. When we come back, the latest on how the economic slowdown is hitting startups.
Armed with facts, she takes the news by its horns.
You think the future of these students are not hampered?
Fierce, bold and direct, setting the tone for the biggest stories. From every corner and every angle. Expect nothing but the unfiltered truth.
News first, niceties later. Watch me, Nabila Jamal, on India Today.
Welcome back. The Great Indian Startup Party of 2021 has ended. 2022 has been a year of reckoning for startups as well as their employees, many of whom are finding themselves out of jobs. According to an aggregator site, nearly 30,000 startup jobs have been lost this year.
Once a poster boy of the Indian startup ecosystem, EdTech company Byju's today tops the list of companies laying off employees. Its own website lists acquisitions in the past 1 year amounting to more than $2.1 billion, splurging on inorganic expansion, grabbing companies like Akash Educational Services, Epic, and Greater Learning. Its results for 2020-21, announced after a delay in September this year, shocked analysts with a 4,588 crore loss. Even industry veterans like Harsh Goenka and Kiran Mazumdar-Shaw were left scratching their heads over the company's money model. But the real impact is being felt now, with Byju's letting go of 2,500 employees this year. According to a tech layoffs aggregator site, one of its subsidiaries, White Hat Junior, has fired 2,100 employees. It's been a harsh tech winter for several startups, with the economic climate freezing the funding pipeline. According to layoffs.fyi, Ola leads the layoff list with 2,600 firings. Swiggy has let go of 2,250 employees, and ByteDance has fired 1,800 people. Paisa Bazaar and Unacademy have both fired 1,500 employees. The total number of tech layoffs is near 30,000 this year. Among the other well-known companies to have fired employees are Make My Trip, Meesho, Uber, and Paytm.
In many cases, they didn't have earnings, and they relied on either borrowing money to make up the gap or raising venture capital or private equity money. And free money was basically, free and plentiful money was basically the paradigm. And so you're now seeing those companies who have negative cash flows.
The Indian startup space grew at a jaw-dropping pace last year, with more than 40 companies turning unicorns in 2021. However, with funding drying up, the decline for many has been equally dizzying.
Well, despite the gloomy outlook because of the job losses and cost cuts, experts believe that this economic downturn might also have a silver lining. Experts say that now companies would move towards sustainable business practices, preferring profitability over aggressive expansion. What's going to happen? Only time can tell. This was Akanksha Chaturvedi for Business Today TV.
In one of the biggest consolidations in the global beauty business, Estee Lauder has agreed to acquire Tom Ford in a deal valued at roughly $2.8 billion. The sale had drawn big names in luxury, including Kering, the parent company of brands like Gucci, Bottega Veneta and Alexander McQueen. The acquisition, still subject to regulatory approvals, is expected to close in on the first half of 2023. Tom Ford is best known for its menswear, though it also sells women's wear and accessories, as well as a fast-growing high-end line of cosmetics and fragrances. Tom Ford's beauty business is considered a so-called ultra-prestige brand. Tom Ford, the founder, is expected to serve as his brand's creative head through the end of 2023. With Uttarakhand opening up doors to legalized hemp farming, one of the startups looking at the opportunity is Bombay Hemp Company. The Ratan Tata-backed startup is looking at growing industrial-strength hemp within strict international parameters. My colleague Dev Kotak spoke to the company's chief legal officer, Delzad Deolaliwala, about the future of the industry.
I am joined by Delzad Deolaliwala, who is the chief legal officer at the Bombay Hemp Company, funded by Mr. Ratan Tata. Let us try and understand what this concept of hemp is and what this massive victory that they have been talking about comes for them and what it really means after a span of 6 years of constant struggles and failures. Thank you, Delzad, firstly for speaking to us. I just want to try and understand why is it such a big occasion at the Bombay Hemp Company and for several other stakeholders in the hemp industry and association. What exactly happened in Uttarakhand?
Right. So the policy of industrial hemp was made in 2016 by the state government of Uttarakhand. Primarily the excise department was the one who formulated the policy. The most important thing over here is that there's a permissible limit of 0.3% THC when it comes to industrial hemp cultivation. And there are two main uses of the plant, the fiber and the seed. is what the main usage of the industrial hemp crop is. So when we made the policy, the most important thing was to also do a lot of scientific research on the policy regarding what kind of seeds can be used, what kind of institutes can be enabled to use those seeds. So we started working most importantly with the state government of Uttarakhand, where GB Pan Institute was the main primary institute that we are working with for doing a lot of understanding on how genetics of hemp grows in that state, and also CSR NBRI, National Botanical Research Institute, Lucknow, where the main body to understand the full germplasm, the full application of hemp. So when it came to that important aspect, Uttarakhand gave us the right opportunity, the right platform to get a license for the first time in the country to allow us to grow industrial hemp and use it for these two main purposes, where a scientific research was important, and that's what we have done since 2016 with CSR, NBRI and GB Pan Institute to get the right seeds, to get the right application of industrial hemp in the country.
China's zero-tolerance COVID policy is angering its citizens, and nowhere is the slow burn more evident than in the southern manufacturing powerhouse of Guangzhou. Scenes posted on social media showed the unprecedented scene unimaginable in the authoritarian Chinese society.
Incredible scenes of anger on the streets of a major Chinese city, of frustrations bubbling over. An outpour.
A new published report states who are the world's highest paid actors. And guess what? Tom Cruise is the highest paid Hollywood actor in the world. His movie Top Gun Maverick earned him $100 million. Now we do love seeing good old Tom in action. Well, right after him, it is Will Smith. Remember the Oscar slap? Yes, the same guy. He earned $35 million for Emancipation, but the film is yet to be released. It's scheduled to release in 2023. The film is based on a slave who escapes from Louisiana plantations. Following him is the Titanic movie star Leonardo